Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino, and you're listening to the Movers and Shakers podcast. Today's guest is Josh McCallen. He currently serves as CEO, president of Viva May Hospitality, which, man, listen, humbly welcomes and serves over 325,000 souls a year, every single year. And you know, Josh, I only have one thing against you. You're Irish. Other than that, you're a great human being. And you got 10 kids. So out of everything, I'm a quitter. I've only got 6. You've got 10. So welcome to the show. It's really my honor and privilege to have you on. How you doing today?
No, there's nothing better than this minute and couple minutes with you and your awesome community. No, it's a big honor for me, Gino. I joined your community, about half a year ago, maybe 8 months ago, because I just loved what I saw in your character, in the people you surround yourself with, and what you teach. You know, I just love it.
And listen, I just put up a little prop. I wanted to show Josh that we're going to be talking about his business, and this is the Renault Winery. And for me, what I think Josh is doing is absolutely insane. It's something that I could never do. But what I love about it, and this is what people have to understand, everyone's always thinking about scaling and getting really wealthy. And to me, I think most of us lose the picture of why we're doing things. And that's why, to me, it's just an honor to have you on, because you're passionate about what you do. You have a reason why you're doing it. You're not just going after the money. To me, I think you're being a steward of your investors. You're being a steward to your family. You're showing your family why you're doing this. And if I'm one of your children, I'm looking up at you and going, Dad really loves what he's doing in life. I want to emulate my father. I personally think that that lights me on fire. And I'm like, okay, I can get over the fact that he has this crazy model. We're going to get through the model, right? But first of all, let's get through this hospitality, because people are on this listening and want to hear about multifamily. This really dovetails perfectly into multifamily, because multifamily is a hospitality and it's changing into hospitality. And if you can grasp these next 30 minutes and listen to Josh and his mission, you'll become a much better investor, a steward to your investors, and you will be serving your residents at a higher level. So take it away. Give me the word hospitality and why you jumped into this crazy model.
Yeah. So to step back, I mean, in one way to understand what we do, at accountable equity is similar to your community, where we have investors join us side by side. And Melanie always says, if we had $1 billion of our own personal wealth, which we don't, would we buy properties with partners or not? And because of the magical benefit, this super wonderful benefit of building community with investors, giving them all these partner benefits, taxes, yield, and legacy. She says every day, every time we give a talk, she would do it this way, no matter what position of wealth we get to. And that's not our goal. Our goal is service. And what do we do? So accountable equity is this community of accredited investors, 4,000 strong today, thank the good Lord. And you say, well, 4,000 people read the email, come to events, but it's actually about 425 families. You could probably double that. Most of them are married. Over 800 people have decided that they want us to be accountable with their equity. And we put that money together through those private placements, which your audience knows all about from multifamily. So I learned everything I know from going to the seminars that you go to and that you give on how to do a syndication legal, fair, and straightforward. And we're taking back this idea that you could be a direct partner in real estate without having to do the work, but get all the same tax benefits as if you did all the work. And that's what we love about syndication. So accountable equity is a community of investors. And so in that, we try to deliver hospitality. And I think that's something everyone who's listening, we have a couple recipes. And I know you used to cook things, and I know you're probably great at that too. You're probably better cook than I am, even though I have 10 restaurants and all this good stuff. I should never say I, because I can't do any of this myself. But then what do we do every day with the capital that comes in? We deploy it into high yield, low basis, meaning affordable, buy right strategies, massive resorts. And you might say resorts. And there's a special niche we're in at Viva May Hospitality. So we get to be part of accountable equity, and we get to be, my wife and I get to also have imbued our heart and soul into something called Viva May Hospitality. And I think even if you never want to do hospitality, Mr. or Mrs. Listener right now, we could probably share with you a few tidbits out of hospitality that will make your business grow quicker. And I think that's what you want me to do today.
I do. And when I first met you, I was just trying to wrap my mind around the complexity of what you do. And it's a very hard thing to do if you don't have a passion for it and if you aren't guided. I mean, for us, by the Holy Spirit and by saying we're on this planet for a certain amount of time. And for me, this next generation needs to work for a company like Viva May because they need to be taught these skills that they're not taught. And they need to know that when a client, a customer, a resident comes into the office, that you meet that person where they are and you try to serve them and you try to deliver superior customer service and an experience. And if you can have your team all trying to row in the same direction, that lends power to what you're trying to do. So, define hospitality, first of all. And second of all, I didn't even ask you, why were you led to do this type of mission?
Yeah. So little backstory on myself. Grew up in a great situation that allowed me to see life as a gift, not as a. There's no entitlement in this side of the table here. Grew up. Parents got divorced. Pretty typical thing in their late 70s, early 80s. Not bad people. Definitely, probably it was too toxic. So they separate, and I have one little brother. I'm like a 6-year-old guy, 5-year-old guy. And then we're separate. It's divorce. It's early 80s. Who cares, right? That's like 50% of the population. And then my poor mom gets struck down with a stroke at 27, cerebral hemorrhage, in a coma for 5 days. I'm a little dude, pre-kindergarten, in kindergarten, so I just get shuffled around from houses for a while, months. And she says she thought she was going to die. Everybody thought she was going to die. She ends up not dying, but she never works again. She was a nurse at the time. She never works again, and we never have any money. So we get the privilege of seeing the world from, the grass and the dirt, and loving it down there. So what that means is you have to hustle. My mom, I imagine my wife loves telling the story because we have 10 kids, and she grew up in a relatively loving family. They didn't have any money, but they had love and they had an intact family. And so she never had to do laundry when she was 6 years old or cook food. Or, you're a little dude, you're in the kitchen doing something because mom's sitting on the couch. She can't move so well. And so I was a dishwasher. I was a home fussing around at home since I was a little dude. I tell a joke, Gino, that only guys like you would get and your audience. I used to say TV helped me a lot. I know TV's not great, but back in the 80s, my mom's watching TV like 10 hours a day. So I was an aficionado of watching This Old House and movies. So I learned how to be handy. I mean, whenever it was Christmas or something, I'd ask for like a little tool set. I had one of those electric drills from 10 years old, the Craftsman, the first one you could plug in and put screwdriver bits and fix things. So here's the joke. I learned how to be handy man from watching This Old House. And when I was about 10 and Die Hard came out, the movie, I learned that I could fight a man. I remember watching Die Hard. Remember Die Hard, that hilarious movie?
Yeah.
When you're a little dude. I was just pouring sweat watching that on the sofa. Like my muscles were all tense. I'm like, because it was like anyway, I always say I felt like I could defend my family after I watched that. So those kinds of influences just made me, honestly, there is a gift that I did not create, was given to us, is I just enjoy life, and hard work is as easy as soft work. Actually, less work is harder for me.
Mm-hmm.
So those kind of components just propelled me. And so we've had some outsized opportunities since I was 12.
And when you're there at that age, do you think you fostered and you had to take care of others? Is that where you think the hospitality came from? Like, I'm helping this person, I'm helping that person, I'm helping myself, and I'm thrown into the mix?
Totally. Yeah. I mean, listen, there's a Viva May. I'm going to use Viva May and the company we're building with hundreds of staff. I'll teach you what we teach them, if you don't mind, and it'll answer that question. We always say, not everybody is built with that inkling. Gino, you have it. Your whole culture is service oriented. I think you try to lead with delivering experiences, changing people's hearts and lives. And I know you're a servant leader. Not everybody's actually naturally a servant leader, but we always say it takes 3 virtues to thrive at our business. 3 virtues. And virtues are something you can never quite ever get. You can't reach it. There's not a day when you're like, I'm perfectly virtuous. So why not just struggle to get there? Because it's the struggle that actually all we can commit to. So there's 3 virtues we say, if you want to work with us and our team at Viva May, or even in accountable equity, say, will you adopt these 3 Viva May virtues? And I think they're primordial, go back to the dawn of time, and that's why hospitality is so intimate. First one, joy of service. Will you pursue it? Will you foster it? Will you engender in your heart that you see serving as a joy? Now, some of us are hard coded. I was hard coded. Many of our staff are hard coded. This is just how they were going to live the life, even if we never put that virtue on the wall.
Mm-hmm.
And what's actually not actually on the wall, it's something we speak. Joy of service. The second is, will you join us and seek to grow in humility? And we say, why is humility so important? Humility is when you get to see, when you choose to see the same infinite dignity that you feel for you and all your problems and all your worries, feel infinitely, you feel like you're the center of the world because you are for your world. Could you transpose that same dignity on the next person you see down the hall and in front of you at the table? Just see their dignity, and that will engender humility. And so this kind of language is part of the training. And what we're trying to do is give people a sense that they're allowed to think bigger than tasks and bigger than just, a person has as many infinite problems and wonders and worries as you do, and they have the same dignity. So once you get that level ground, and we fight to live that level ground, then you don't have to worry about any pop culture movements.
Mm-hmm.
I always say, there's been pop culture movements over the last 5 years blowing up everywhere, right? Different movements, different everything. Great news. We love you anyway. I always say we loved you before these movements got cool. And it doesn't mean we're perfect love, but we're trying to love. And then the third thing is, will you turn your work into a ministry? And so this is this idea where Melanie and I were with 200 of our staff last night in a once a month pep rally, we call it. It's a culture training. And you're always welcome to come anytime you want. So is anybody who's listening. We'll give you the schedule. And we have visitors every time. But what we say to them is the same three virtues. And what we say is the ministry one, will you choose to make your work a ministry? Great news, Jim, Jenny, Jack, Sally. You may not work here forever. We have some staff that have been here for 20 years, even before we purchased these properties and we inherited them. And you have other people that are here for a summer because they're university students. But while you're here, you're the representation of everything we hold dear to each guest. So we're asking you to embrace these three virtues, even if it's for 3 months. And guess what? It's going to help you see the world a different way and maybe impact upon your life things that'll propel you later on. So we try to be a gift in some way to the team first. The team, we give them the unfettered power to do as much generosity and kindness to our guest as possible. And then the third thing is we try to pour that beauty into the property. So beauty of team, beauty of guest love, and then beauty of the property. And so people look us up online and they see some of the prettiest destination resorts in the whole country. We compete against some of the best ones. We happen to be outside the market circles of New York City, outside of Philadelphia, outside of Washington, D.C., and Virginia. So those areas are some of the richest areas, wealthy concentration centers, and they enjoy being able to drive to our properties and experience beauty.
Josh, what it sounds like to me is you're empowering your community, your team members, and you're also educating them. The humility part is great because most of us struggle with that, and I like the virtue. We'll never get there, but we're striving to get there. And for anybody listening to this, I think one thing we also need to do is we need to be a little bit more compassionate for ourselves. We tend to beat ourselves up a little bit. And I've learned that over the last year, 18 months, that just be a little bit more compassionate for yourself. And the humility for me is a big one. I think we really need to once we start sharing that humility, we're able to look around and we're able not to judge. We're able to actually make decent decisions because we're not all locked in and we don't know all the answers. And it's okay not to know all the answers. And don't beat yourself up if you don't. That's what's so wonderful about life. Now, I said I was going to really crucify you and beat you up for these deals because I think they're insane. So I want to pivot into like the buy right, the manage right, and the finance right. Because for anybody listening to this, the parallels between multifamily and what Josh is doing are pretty astounding. Because you buy a multifamily, there's multiple revenue streams in a multifamily. You have laundry, you have late fees, you have application fees, non-refundable moving deposits, all of this other stuff going on within the business. And in Josh's business, very similar. Once again, I hold up the bottle of wine. He's got a vineyard. He's got a golf course. He's got he's got the hotel staff. He's got weddings. He's got so many different things going on. But from that aspect of being able to buy these assets and managing and financing, give me some of the criteria for buy right. And then let's look into the financing of these, because you need to be a gazillionaire to own these things, don't you? Well, not really. Josh is going to tell you how he's been able to pull that off as well. So let it rip.
I will. So Mel, so the buy right. Here's our basic philosophy of buy right, and maybe in our first 10 acquisitions, this will hold true. Mm-hmm. We do think we have we'll have 5 properties by the time you drop this in 5.5 years. So we're starting to get a program, which is the manage right. We'll get to that in a minute. But buy right, our buy box right now, you're going to love some of this, is primordial natural attraction. So it has to have that on an exponential level, or else we probably aren't going to kill ourselves to do it. Because what do we mean by that? Things that predate even this civilization we're running around in right now. What are those things? We as humans have always liked nature, beauty, water, mountain, open landscape. Agriculture, I think, is a draw. Our heart kind of leans towards into that. So when you look at our properties, the smallest one is 178 acres. Our largest one now is 440 acres. Our water frontage today is 2.5 miles of waterfront on the Chesapeake Bay, which is the wealthiest boating areas of the country, and great drive-to destinations for DC. And we're about to acquire another. We'll hit 3 miles of waterfront in our properties aggregately. When we make our next acquisition, we'll have over 1,000 aggregate acres under management. And you say to yourself, now we're going to talk about manage right in a second. So buy right, here's how we buy them. We like to buy a broken business on a beautiful property. A broken business then creates the opportunity for value add. Similar to it's the parallel is buying a multifamily that was in a family for 35 years. Son is running it now because Pappy died 4 years ago. Son hates his life. Son hates his property. He's like, could you just buy this dang thing off me? That's the same model we do in these primordially beautiful properties. And I can give you a couple case studies. But what the numbers look like is, what if we could buy, like our first acquisition, Melanie and I and the partners did, and we have partners, everybody listening here, you're the kind of person that has invested with us, $50,000, $150,000. We've had a few $1 million investors, but most of us are $100,000. Why do they do it? Well, they like the fact that we're buying 100, like our first acquisition was 2018, the week of Christmas, as partners. I had done this for a family office before. We'll talk about that some other time. And we came together and bought 226 acres, 150,000 square feet of interior space, small hotel, 50 rooms, and mostly vacant building space, but was once a glorious winery. As a matter of fact, America's most historic winery by fact. And I can explain that if you ask me. 160 years of history this year. So what did we pay for it? We paid below the value of the land. And we got all those other toys. Oh, I forgot to tell you, it had a championship golf course on it too. So sometimes when I was doing the fundraise in 2018 and a lot of them are multifamily investors, and they would say, well, I've heard golf really sucks the money out of the business. I say, good news. They're throwing the golf course in for free. That was my joke. And they're like, but vineyards, I heard vineyards don't make money. I'm like, great news. They're free too. We're basically paying half price for just the hotel.
Yes.
Okay. So I'd say, let's look at it this way. We're paying 50% the value of the hotel, and we're getting everything else for free. And of course, that's the way I perceived it in my own mind. And I said, but we need to spend a lot of money to bring it up to a 4-star quality level. And 4-star, I'd love for you to ask me about that. This is part of buy right. So I'm still in buy right. There's these stars out there. And we're not
Mhm.
talking about the review you put on a page. That needs to be 5-star. If I delay, if I don't, we don't serve you right and we don't get a 5-star, we apologize. We actually call you and apologize because we let you down. And we're not perfect at that either, but we're fighting the fight. So, what does 4-star mean? Here's some brands. We've all stayed at a Holiday Inn Express. Very efficient business model. It's called a 2-star hotel. Why? Great rooms, clean. This is a really well run one. Great rooms, clean, no other amenities, right? Maybe
Mhm.
free breakfast in the morning. That's called 2-star. 3-star is complicated and it's not in favor. It means full Holiday Inn. This is a hotel that might be in a city or might be on the edge of a city, has all the rooms, maybe even more rooms than the Holiday Inn Express, but it has a full 365-day restaurant in it. And it has a moderate to significant amount of catering space. That is what a 3-star hotel is. And so those are hard to make money at because there's no natural reason to be there.
Yes. Okay.
Okay. And they're out of favor. So then you get to 4-star. What's 4-star? This is when you have all the same components of a 3-star. You have to have a restaurant, you have to have catering space, but you have more that you can sell. And there's a reason to go there even for leisure and for experience. So probably 4 stars where you start slipping into experiential.
Mhm.
This is where something that we own on property will make us as much money as the rooms.
Mhm.
Now that's where 4-star resort really adds the gas. So a resort, by definition, by my definition, means amenities that you can charge a premium for. And you might stay there. You might not actually go to the town. You may stay at that property because it might have a spa, a restaurant or two, a golf course, or some boating or something fun that you'll actually spend money at the property more than what you paid to stay at the property over the time.
Mhm.
That is a moneymaker. But there's also something called 5-star and even 6-star. And 5-star is when you do all the same thing as a 4-star, you charge twice as much for the room and you double your overhead. And this is called Ritz-Carlton,
Mhm.
4 Seasons. So what happens is the profitability per dollar drops in half from 4-star to 5-star. So you might say, well, then why do a 5-star? Why do people build $400 million Ritz-Carlton hotels or $1 billion St. Regis at the top of Park City? And I'll clue you in because your investors love this. Because they're going to add value to all the vacant land that they're around or the
Mhm.
land they control. So typically it's a recapitalization strategy. They're going to sell houses attached to the resort. They're going to sell
Mhm.
condos. And then they'll pay off the hotel. And now they're going to make more profit because their basis is down. Anyway, I've just explained buy right. We like to buy them for the value of the buildings now. So now we've moved up from dirt value and we say we will pay you for the value of the building. And even that, if you and I bought the last property I bought together, it was a 440 acre. This is the fourth one. It's called Bohemia Manor Bohemia Manor Farm. It's from 1660. It was founded. It predates America. It was back when we were British people, and it has all this great history. It's right on the Chesapeake. It's absolutely out of a movie. We paid less than the value of the house because they had built a winery. They had spent millions of dollars building the most beautiful vines on the East Coast. I mean, the East Coast can make great wine if you spend millions of dollars on the vines. And they did. Thank God. We got those for free. Then they built a winery 7 years ago. They spent $6 million on the winery, production facility, things that are like you have to look them up in magazines, the equipment we have. It's so nice. And then they built a tasting room. And then they build a dock, and then they build a bulkhead. Guess what? They give us all that for free too. So why? Because they were $100 million family office and they wanted a winery. And then they didn't want a winery 10 years later.
Mhm.
But in the 10 years they were there, they spent about the price that we paid them in new improvements. Oh, and by the way, it came with 400 acres and a 100-year-old classic mansion that you would love. It's 12,000 square feet. It's all waterfront. it looks like, again, out of Downton Abbey. Okay.
Josh, what you're describing here is I want to jump in real quick. And if you're listening to this, think about what your buy right criteria is. And Josh has really nailed it down. And what I loved what he said early on, it may change after the 10th or 11th because the market cycle may change. Your appetite for risk may get stronger because now all of a sudden you figure this out. Why go for 400 acres? Why not go for 4,000 acres? Or you know what? Let me tone it down. Or maybe I have access to much more capital to, let's say, my own family office. So I may not be worrying about these smaller assets. But I took some notes here because it's important. You're buying value add. That's what you're doing when you're buying a multifamily. Hopefully, you're buying a multifamily that may have some occupancy issues. They may have some operational issues. Rents are a little bit low. Expenses are a little bit high. You see the value where you can add a clubhouse. You may put some more amenities in, washer, dryer hookups. Very similar model. I just think Josh is crazy once again because there's so many moving parts. But you see the passion. You see that he loves it. And you see that he loves to tinker about it. Once again, this is the mind of somebody who is not looking at money. He's looking at opportunity, and the opportunity fuels him. And that opportunity that fuels him, ultimately, the money is just the result. And I want you to think about that with multifamily. It may take you 18 months to stabilize a property. That's why a lot of people don't want to do it. They want to get the quick buck. They want to fix and flip this house and go on to the next one. What they're doing is they're creating themselves a job. What Josh is doing and what I'm trying to do is we're trying to create a legacy. Can you imagine buying a winery from 1854? The story, the branding, it's very similar to multifamily. You're buying 100 units in an area, rebrand it, make the name or the story of the property. And that's what Josh is doing with every single one of his properties. Go online and take a look at his properties. They're so beautifully branded. They have their own personal story. Listen, I want to just leave the office right now and come up there and hang out with you and go play some golf, even though I don't play golf. Maybe we'll go do some boating. But it's beautiful how the buy right is just encapsulated. So as you're listening to this, what is your buy right? What are you trying to accomplish? Is it value add? Is it stable properties? Are they newer assets? Are they older assets? And it may change, but just become crystal clear. So when the opportunity presents itself, like when Josh saw 440 acres, he saw a house that's 100 years old, a beautiful mansion, and he saw the vineyards for free and the wine. He didn't even have to think about it. He said, game on. This is what I want. The focus came in, he saw it, and bam, he went out and bought it. And I think that is the testament to the business model. That's why I don't think you're as crazy as I think you do, because you understand there's so much value here. And for those of you that are doing duplexes and quads, you will become financially free eventually, but there's so much work into what you're doing. And I think Josh may on his first deal may have said to himself, this is really overwhelming. But now he sees the power with the size of the property. You know, you can start out with a 10 unit, 8 unit, and that's great. I think everyone should start there. But don't stop there, because once you see that 8 unit and then you do an 80 unit, you're like, well, it's probably around the same amount of work. It's just another zero. And then 80 units becomes 300 units. That ultimately, am I speaking, am I praising, am I speaking to you, I mean, in similar fashion? Because I was held back by the size. 25 units is a lot. And it is when you start out. But I promise you, there are so many different ways to get into this business. And if you follow the buy right, the manage right, and the finance right, that's important. You need a map, a process. And Josh intuitively had his own map, his own process. He's buying these things. And I mean, how many of these do you need to become financially free? To him, that's not the point of how many he's doing, because he has a mission of building an enduring organization, an enduring legacy. So now that we got the buy right, I mean, I really want to jump into the finance right, because you've done some of these with creative financing strategies as well. And then after that, let's jump into the manage right.
You got it. Yeah, it's a little connected to the management, but the finance right today, and we would like to continue to acquire after we get this one done. We'll continue to keep our eyes open, because right now we have an interesting time. The high interest rates, you don't even have to really hard sell a seller financing component. You just have to come in and say, here, you know, hopefully our next seller is listening. It's fine, because I'm going to say the same thing to them when they shared it. I'm going to say, great news. You do have a special property, and I know how much you've poured your heart and soul into it. Did you know, Mrs. Owner, that our mission is to revive souls? That's what Viva May means. And everything you've done here. So this is actually what just happened at that mansion property. They spent 10 years and a ton of time and a ton of money pouring their heart into the design of the buildings, the design of this. And honestly, it was good. So we were able to share with them that we have a 3 soul strategy. we want to revive souls. Our name Viva May is French for revive the soul. Souls of our team come first, and we want to pour quality work opportunity, challenge the bejeebies out of them. I'll have to tell you about that some other time. We're not here to baby them. We're here to put them on a varsity team, and I'll talk about management later, so we'll do it. The second soul is the guest, and the third soul is the story that you imbued into the building. Because you poured your heart into this building for a reason, and we're going to continue that story, and you'll have a legacy here, and you'll always be welcomed here. That's first thing we go through. 2, we all know there's no debt out there for this asset. Why is there no debt there, Josh? Because you basically have a hobby. That family spent $14 million aggregately fixing that property up and buying it. We bought the whole thing for 7.9. So, first of all, the value was not what they wanted it to be because they never built an operating business.
Mm-hmm.
Actually, it was 8.9 total, of which we said we will put some debt from a third-party debt, but they don't want to go very high because there's no cash flow other than hobby cash flow, similar to a really tired multifamily with 50% vacancy. You wouldn't be able to finance that very well. Mm-hmm. That's kind of what we're buying. So we always come in with a 2-step strategy. Secure the first part with asset debt so that they're really just getting really loan to value, and they're going to sit in first position. This is a really interesting finance right strategy that I want you shared one with me years ago that I still use, and I want to share this with your audience. When we sit down with the owners, usually they're high net worth people, thank God, and they're not exactly worried about tomorrow's check. They're worried about making sure they get as much as they can for the asset that they have to let go of right now. Mm-hmm. So we say to them, the best thing would be for you to hold a second position type of mortgage or loan, and we'll collateralize it with this, this, and this, and we'll put our personal guarantee on it. Therefore, the ideal strategy, and I have succeeded at this once, not every time, is for you not to have a lien on the building. Have you ever talked to a seller like this? Here's what you can do, Mrs. Investor, owner, Mrs. Owner. You can have a contractual priority on my equity in this project in a special purpose LLC. So you're going to be a lien on the LLC, not on the real estate. And then at first they'll be like, why? Why not just on the real estate? I'll say, well, that makes it even harder to get other lenders. And we're going to use this first lender for construction, and then we're going to go to a real bank and get a real loan. And they don't want a second. 9 out of 10 times. They don't want a second. And if you want max dollar, you could be over here sitting off to the side on the controlling LLC, but not the real estate. And if you can get that deal done, you will fly through the refinance strategy. Did I help explain that one well?
That was great. That is phenomenal. And what I love about it is you're buying an asset where there's not a lot of liquidity, there's not a lot of demand, and it's very hard to finance. And this is what's going on in this current part of the market cycle. A lot of these assets in multifamily, they're hard to finance because there's just so much debt on them right now. Projections aren't there. Rates are at 6 3/4 to 7. The cost of capital has gone up, and sellers don't want to come down. And it's very interesting, very, very similar parallels. Now, what I love about what you're doing is there's multiple streams of revenue and the managed right. So I want people just to have an open mind to say, how can I increase the operations of my business, whether it's multifamily, whether it's an RV park, whether it's a mobile home park, very similar things. RV park owners are doing exactly what you're doing. They're putting venues in their space. They're making outdoor events. They're putting stages. They have pools, they have restaurants, they have golf carts, they have fishing, all these different elements. And Josh, before you answer that, I was thinking, we just bought a farm down here in Florida for the family. I think one of your next ventures should be to buy a farm and have that as an event and have farmland and cows and just have, gardens and maybe have, agroponics and have you grow your own stuff. I would love something like that and if you're an investor and you want to be part of that, make sure you get on Josh's list, because when he has that opportunity, I can see the smile, because we're thinking that would be a labor of love for me to be able to see something like that come up, have your own winery, you're making wine there. It'd be amazing. So anyway, the manage right strategy.
Manage right, we kind of keep it right down the middle. So back when we raised our first dollar, the teachers that I went to helped me realize that over here, you and I tried to figure out how to do real estate. I bought a duplex in the 90s. I figured out as best we can. Melanie and I owned it for 7 years. Then we didn't own real estate for a while, but I joined a family office and learned how real estate works and built about $100 million worth of luxury homes. And then we started the hotel businesses for that family office in 2012. Now, in the middle there, though, the manage rate. As soon as we took $1, I share this on every podcast I can. We became a private equity shop. And I always say that because once you write that private placement memorandum, you commit to having investor relations, you commit to having, investor updates and whatever. You became a boutique a boutique private equity shop. So that's why it's called accountable equity. It's not called Viva May. Viva May is the management company that knows how to brand and sell a lot of things. So here's what we do at Viva May to make sure the management right goes on. One, we train it all the time. And why? We just want to make sure that the end result is that the guest feels loved. I could say we could get better at everything, including specific processes and throughout all these operations, but that is where we focus and we say, and we have to be a varsity player. Now, the manage right for us starts with the wedding contractual revenue. Did I grow up thinking I'd be, one of the more biggest wedding operators in the country? No, I did not know that was our future. But what I was thinking when we started buying these massive properties was what is the safest way to own a hotel business is to already have next year sold out. Sell out next year, you sell weddings this year. Now, that's how we've been running these for years. And that's why the returns have been there for the investors, even during the COVID. Now, on top of weddings, we always say weddings give us literally a piece of paper with 25% cash the day they say yes. So $100,000 wedding, they write a $25,000 check today in the year 24. The wedding's in 26 now sometimes, right? Because that's about the cycle, late 25 now to 26. So they gave us $25,000 today. And like you with your non-refundable deposit, we change it to a fee. It's your first fee. So they're non-refundable. So you may divorce and never even get married. You locked up our space. That's a fee. Okay. So that then secures next year's revenue with contracts and with the cash, which is another reason during the COVID, we were liquid with cash because during the COVID started something called the COVID wedding bubble. And so we were a major beneficiary of that, which helped to propel a lot of our profitability and our growth. But the next thing about manage is we say, if we're going to be a massive wedding operation doing multiple per day in different spots on this hundreds of acres, then we need to have a robust culinary team. If we're going to have a robust culinary team, we're going to have a robust restaurant, not the other way around. It's like you have to have a restaurant, but we go through the catering over to the restaurant because catering's contractual, restaurants are transient. But then we try to lock up the restaurant with contractual. And so here's where we try to sell an after party for every wedding over at the bars. We have 16 unique spaces at Renault, 12 at Kent. I mean, really unique spaces, because we have historic stuff. So I have authentic Al Capone speakeasies. Joe Kennedy drank here, all kinds of crazy stuff. But that then secures some of the restaurant revenue. Oh, and how about this? How about last year we were asked for 7.4 million room requests for wedding blocks at one property. We don't have that many rooms, right? So you and your family, big family, you might say, guys, I love your venue. We have some money right now. We're upper middle class. That's our market. We'd like 40 rooms. I want my whole family to come in from the whole over the country. And I want them for minimum 2 days because I want to make an experience. We're going to golf in the morning on the day before. We're going to have a party the night of. I want to have we have a whole cigar club outside. I want the family to have a wine tasting with the winemaker. You want a whole little, by the way, every one of those things costs you money, Gino. I'm sorry about that. And then I'm not sorry because guess what? Here, we have a motto about sales. You're going to love it, Gino. I hope you don't fall out of your chair. We teach our sales team to tell everybody that sales are sacred. And what we mean by that, I had a meeting with a bride yesterday. She grabbed me. She goes, I love your place. Can I sit with you? I said, sure. I said, do you know why we say sales are sacred, Mrs. Bride? Because the families that are depending on us doing a good job selling, they're sacred to us. See that gentleman? He's in maintenance and whatever. He's been here for 15 years before I got here. He has a family of 5. And because we can do a great job for you selling this and we sell it with good dignity, he is fed. And that is a covenant, a commitment that we make here and we make to you. And it's a nice understanding of how sales work. It's not we're asking for you to drop money. It's like, let's build your experience. Now, bottom line, then you add weddings, rooms. So we turn away more revenue from rooms than we take. Why? Because our buildings are only so big. And because there's multiple weddings happening at a time, there's overlapping blocks. Get it? So you may have asked for 40. You wanted Friday and Saturday. Well, I have other weddings coming in. They also want 40. And they want it twice. That's 80 room nights. You get my point. So we have so much demand that we question all the time how to not lose that revenue. And that is actually one of our biggest challenges is try to capture all the given revenue because we already sell the hotel out now. But you can't just magically have more hotels. So we're always brainstorming, working with development partners and trying to figure that one out. But that's where management comes in. And I hope I answered that question.
Absolutely. And I want to share something about sales as well. I had a priest friend up in New York, and he liked to actually invest in all of the different events and functions that the church had. And he simply said to me, no margin, no mission.
Ooh, I'm writing that one down.
And that really landed with me, Josh, because I was always of the type that I feel as if I'm upselling people or I just, I didn't have a positive outlook on sales at the time because it's just the mindset that I had at the time. But when he hit me with that, I was like, wow, if you have a mission out there, unfortunately, money is just a tool. If there's not enough money to fuel the mission and there's not enough margin in it, you won't be able to provide the mission. If you don't have enough money coming into your different hotels and different venues, then you won't be able to pay the maintenance person. You won't be able to pay the people on the site, and you won't be able to deliver that superior customer service and that experience. So if you're looking at it from that perspective, I'd love for anybody listening to this to really, I guess, change their mindset on what sales are and what money is all about.
You and I have met a slimy salesperson, so we're not talking about that. We're talking value on top of value on top of value. If you believe in the value you have, there is nothing but positivity in making that sale. Mm-hmm. If you're taking from people, this is not who we're talking about, right?
Yes.
We're not talking about those people.
And Josh, last question before we sign off. What I want to really know from you is you've built accountable equity and Viva May. Any tips on raising capital? Because I see you out there all the time. You're at a ton of events. You're at a ton of masterminds. For anybody going, I can't afford to be in this group. I can't afford to. No, that's the wrong mindset. The right mindset is it's an investment in my growth, and it's an investment for me to get into rooms that I normally would not have been able to get into.
Yeah, and you and I also have met people that do some fundraising that do feel like they're not authentic. So the being in the rooms and being with people is, it takes time. We call it's definitely an investment of farming, not of hunting. So we're trying to build a community that sustains for the next 50 years. So there's nothing too quick. There's nothing. So yes, our strategy is to be present and to have relationships, and eventually they lead to an investment. And then other times we do a deal alert, we do a webinar, and then they're ready. It might have been next year that they'll be ready. And that's how we build our model. Now, on fundraising, here's the number one most important thing I could share with you. And there is a guy came out and did a YouTube about this with us. What if you could embrace this hospitality concept into your fundraising strategy? Now, we have some secret sauce where we get to do our fundraising events with experiences, spas, boat rides, presentations, keynote speakers, which I'm begging Gino to join the keynote team. So we do them in an immersive experience. And we always say value, real speakers, not talking about us. And you experience the team that runs the property. And we would love for you to be part of it. Okay. So that's how our flow is. It's not closed today or we'll never talk to you again. But it's more like we'd love for you to be part of this. You'll feel it. So we get that. But what could you do? What could you do that allows them to see, I call it the flywheel virtuous circle. So could you, if nothing else, could you host a dinner somewhere in the region and take them out and break bread? Bring your executive team. Try to let them realize that when they invest in your deal, sometimes you find people that own businesses, Gino, and sometimes they invest with us because they know they couldn't hire us. It would cost
Mm-hmm.
too much, all of us.
Mm-hmm.
But they're like, wait a second, I pretty much get the full economic benefit as if I created that company. You're showing me. I'm meeting the person who's going to run the property. I'm meeting the asset analyst. I'm meeting, and they're like, wait a second, I've already built 2 companies. I'm Mr. Smith. I'm I'd rather get the benefit of owning your business.
Yes.
And so sometimes investors see us that way. It's as if they're hiring us, even though they're getting the full tax pass-through benefits as if they did the deal themselves. So how could you build hospitality into your model? And how could you slow it down a bit and realize it is going to take a farming strategy, in my opinion?
Mm-hmm.
Now, these are my ethos. Other people do it other ways. I feel like this is super sustainable. And this is why we think we can acquire and hit 25 of these properties by 2035, because the investors that are in it love it. And mostly now it's an ecosystem that's growing, and it takes time. That first few years, not good. As a matter of fact, there was an HGTV pilot show done on Melanie and I back then, because we thought, well, how are we going to get the word out about what we're doing? And we had this opportunity with this producer. And thank the good Lord, it never got picked up. I mean, they all looked at it, all those different types of scripts networks, and they're like, nah. At the time, we had 9 kids. They're like, I don't see enough drama in this deal. I'm like, really? Because we're like have no money, and we're trying to renovate the most historic winery in America. At the time, we hadn't raised the money, and so it was it could have been a hell of a drama. But I'm glad they didn't do it, because it would have probably disrupted too much. But so it didn't go well. It's still not easy. Okay, it's just time.
Mm-hmm.
Time compounds.
I got to jump in before you give out your information. As you're listening to this, I do not want to hear anybody say it's hard raising money for multifamily. If Josh McCallen can raise money for a winery that's 150 years old with no revenue streams, and he can do that and explain the complexity of that business model to the average person, then you sure as heck can go out and talk to somebody about a 30 unit that's got rents at 700 going to 800. There's a lot. It's a lot easier to do that than what Josh is doing. But Josh is also creating an experience. And the important thing that he said was it's not going to happen overnight, and it shouldn't happen overnight. And you should put some time and effort and thought into what your Viva May company looks like and what your accountable, equity looks like for your brand. It's important to think through this of what your model, because we're all unique, and what do you gravitate towards to? What do you want to create impact in life now for your investors? Josh, where can the listeners get a hold of you?
Please check us out at accountableequity.com, 2 words, fully spelled out. And then we have a fun show that Gino's been on at least once. We got to get him on again, called Capital Hacking, where we talk about the fact is it's the people. I always say capital's people, human power, and financial power. And if you work on the human side, the financial works out.
Josh, you're a 6-year-old little boy. Your mom's 27 years old, and she has a life-altering event. And I can only imagine you being a little boy going to that refrigerator and getting out that carton of milk and pouring himself some cereal, and then getting on his bike, going out to doing all the groceries, doing the work and taking care of the family with a younger brother. And as you get older, that hard work, that ethic, and looking at that as a blessing, I think has imbued the certain talents and the certain skills that you have today. Some people look at that as a negative. I'm so thankful that you look at that as a positive. Continuing on your life, buying a couple of duplexes, seeing that didn't work, then going to work and building $100 million worth of luxury homes. That was the next stepping stone. Then working for a private equity company, a family office, seeing that was the next stepping stone, and then the evolution. And I love the story. And finding the first winery. Once again, thanks a lot for this bottle of wine right here.
Yes.
The Renault winery. I mean, back in 2018, of all people, when I heard Josh talking about that back in 2019, I thought he was a lunatic. Thank God he didn't listen to me. And not once. He's got 5. And 5 can easily turn into 10, but it's a labor of love, and it all starts with his mission and creating an enduring organization. And it's about, to him, hospitality and welcoming guests. And I wrote it down here. I love this. Welcoming guests, hospitable, making your guests feel at home, offering them a home away from home. And that's what Josh, his wife Melanie, and the team of Viva May is doing. So, brother, continue the work and the mission. Thank God. God bless. And we will see you, I guess, on the next show, Josh.
Thank you, brother.